So far we're seeing a relatively muted reaction from stocks as Israel and Iran trade blows, although the blow from Iran came after the market has closed. Dollar sank to a 3-year low, and gold has closed at new record highs. It hasn't yet hit all-time highs, but it has closed at records. Gold miners, however, did hit a 24-year high and are approaching all-time highs. We'll also look at crude oil, as it is very close to a new bull market on the heels of the recent craziness in the Middle East. And by request from a client, from a reader rather, we'll analyze wheat and coffee futures, and we'll look at some other things. So all this and more in today's edition of MasterChartsTrading.com market recap for Friday, June 13th, 2025. Please make a comment, hit the like button, subscribe to the channel, and don't forget to share the video. We will also cover various ETFs, market breadths, Bitcoin, New Zealand dollar, Mexican peso, some of the foreign ETFs, some of the large cap stocks, some of the speculative securities such as Digital Turbine, AbCellera, Bio, Shoals Tech, Unity Software, as well as some of the gold related stocks in the members only section. If you're not yet a subscriber, consider signing up by following the link in the description. We're currently looking at S&P 500. On this chart you can see my indicators, this green, blue, red and yellow lines. Again, you can find out more about them by going to the description. So I just wanted to kind of reiterate what we're seeing here. We hit an all-time high right there on 19th of February of this year, 2025. After that, we pretty much made a kind of collapsing type of move. It culminated on the 3rd and 4th of April and finally bottomed out on 7th of April. Now, I call this President Trump's bear trap because it was due to various information and pullback of information, and then again of information about tariffs. So I call this like a tariff freakout. Then we saw a pretty much bottoming action, a gigantic candle right there where I'm hovering on the 9th of April, which pretty much told me that we're done with this corrective move, and then we rallied. New bull market started on 2nd of May when we closed above this blue support resistance line. And then we pretty much continued higher, and up until very recently we made a high for the move on the 11th of June of this year. Now, past 2 days we've been kind of pulling back, and in the beginning of the video I said that so far the reaction to the attack of Israel on Iran was relatively muted. So today the S&P 500 lost 1.1%. So it's not a big deal. It doesn't appear that the market participants think that this is the pretty much the end of the world or something of that nature. I mean, look at the reaction to the tariffs, and look at the reaction of a significant escalation in the Middle East tensions. So far the market participants do not think that this is a big deal, although when I get to oil, at least the oil traders do think it is a relatively big deal. We can also look a little bit closer, a little bit more granular, if we look at the 4-hour chart of S&P 500. So this is a 4-hour chart of S&P 500. Each candlestick is 4 hours worth of activity. When you analyze anything under the daily time frame, you should be using a continuous security. In this case, I'm using this ticker symbol, US 500 from Capital Com. So on this chart we are seeing two unfilled gaps. One is a gap up from April 22nd, another unfilled gap from May 12th. And as I keep pointing out, market hates vacuum, and eventually those gaps will get filled. Once again, we don't know when. So this is the reaction so far. This is yesterday night, I guess, yesterday evening candle, and this was during the attack of the first news of the attack on Iran. It's a largish candle, but in the context of things, it's not that big. So we haven't even pulled back towards this green support resistance line, and that would be like a first support. Notice here on May 23rd, we kind of bottomed out there and then rallied again. So far, not very big. Of course, this is just the beginning, so we don't know exactly where this is gonna go, but fingers crossed it will not be a big deal, in a sense of at least it might end soon, hopefully, right? Although people seem to be very angered on both sides of the war that's going on. So looking again at our technical analysis, we're looking at stocks, and not a very big reaction yet again. This is Friday, so we will see what happens on Monday. This is the weekly chart. We can look at the same pattern on the weekly chart. So possibly this might be like a shooting star candlestick. They do represent topping sort of action. So notice again this gap here between weekend of May 5th and May 12th. So between weeks of May 5th and May 12th, definitely not yet filled, and it's quite possible that we'll finally fill that gap. But once again, if we do fill that gap and we pull back to, let's say, this blue support resistance line, which is at 5,600, that would represent a buying opportunity. We are not in a bear market, so if we do pull back about 6% or 7%, again, that would be a buying opportunity, and we should consider opening a new position once the bottom was put in. So let's keep an open mind, let's keep a positive attitude. Again, hopefully this will end soon, and I mean, the world itself is changing rapidly with the ongoing conflicts in Ukraine, and now again in Middle East, and elsewhere in Africa there is ongoing conflicts. Here in the United States we're seeing all kinds of unprecedented. The word unprecedented has been uttered so many times it became a cliche now. We're seeing this unprecedented court action, unprecedented deportations, unprecedented this, unprecedented that. So we're living in unprecedented times. So I guess we need to just kind of suck it up and move on with our lives. Ideally, we should be making good money from the trading, and again, you can find out more about the indicators. They are very helpful. Basically, that's what I'm using. Go to the website MasterChartsTrading and find out more about them. We are currently looking at Euro versus US dollar. Euro versus US dollar has made a 3-year high. So we haven't seen those price levels since 2021. So just a few months ago, euro was almost equal to $1. It was $1.02 right there in January of this year. Currently, it's worth $1.15. So we moved, was it 15% or so? Yeah. And we made a new high. So this is a let me see, like 1, 2, 3, 4-year high or so, 3-year high or so. By extension, the dollar currency index made the 1, 2, 3-year low. So we broke below recent lows, where I'm hovering, from September 2024, and this breakdown continues. So far we're holding that breakdown, and I pointed this out. I'm gonna draw this pattern in. So basically it's an inverted, maybe a cup and handle of some sort, I don't know, inverted W. The depth of this big pattern from 9th of September to 13th of January, 9th of September 2024 to January of 25 to April of 25, the depth of this pattern is around 8%. So it's a pretty significant pattern, and if we extend this pattern to the downside, we can estimate of where this might be going. And notice this breakout that occurred back in July of 2021. So looks like we're about to negate that entire thing and go back to 2021 levels for the dollar currency index. By extension, gold has been really on a tear, and notice on a weekly time frame we have closed at all-time records. So this week's close was at $3,433. Previous highs were not closes, they were just highs. So this high from 21st of April was, from the week of 21st of April, have not been yet exceeded, and that high was at 3,500 even exactly. So currently gold is very close to taking out that all-time high, and I think it will take out that high, especially if a dollar, like I just said, dollar continues lower with its breakdown. So gold has hit, has closed at all-time records on the heels of everything that I just said, from economic uncertainty with tariffs to inflationary pressures to new round of violence in the Middle East and the continuing violence in Ukraine. So gold has been a very good hedge against craziness, and notice again opportunities to buy. They were basically on pullbacks towards the blue line, and notice how nicely this lines up. We have an initial breakout back in January 23, and then just every time we pull back towards the blue line, we can buy there. A similar picture occurred. This is gold miners, GDX. Also just closed. Let me take a look at what levels. This is a 24-year high today. Was set for GDX ETF, gold miners ETF. A 24-year high, so we can zoom out and find where that price was last time, and we're looking at October 2011. And notice that the September 2011 is all-time high for gold miners, and we're very close. So there's a good chance, again, if gold continues the way it's going, we will break out to new all-time highs for gold miners. We are definitely trading gold miners. There are multiple alerts for gold miners. For example, SBSW alert was sent. Very nice move. Newmont Mining alert was sent. So several very good moves. Barrick Gold, also very nice move. So again, several good opportunities to buy gold miners. And again, using just indicators, we're looking at buying and close above the blue line. So very nice moves. Okay, let's look at some other commodities. So we're currently looking at crude oil. So crude oil definitely spiked from yesterday evening. So it spiked as high as 14%, however closed at about 7% gain or so from yesterday. Also notice that so far we have not closed above this blue support resistance line, which is at $73.49 for a light crude oil United States futures. Let me look at Brent, and Brent didn't even get that high. So far, no breakout to a new bull market, not yet at least. Let's see what happens Monday, next week. But for now, it seems that one theory is that Israel is not targeting oil infrastructure, and rather it's targeting uranium infrastructure. So perhaps that's the reason why oil has not really spiked that badly. However, yes, indeed, it has increased in price. So we're watching this level of 73.49 for a new breakout. Should it break out to a new bull market, then we could see a pretty significant appreciation. I think we could easily get to like 85 or so, easily towards these levels maybe. Okay, so that's oil. A subscriber, or rather one of the listeners to my channel asked to analyze wheat futures. I don't trade them. Some people trade them. This is a wheat contract for difference, ticker symbol wheat, and notice it's a CFD, contract for difference, from forex.com. What am I seeing on this chart? So wheat has been in a downtrend, and it started a downtrend right there on June 17, 2024. Then you had multiple opportunities to sell it short. They were pretty much successful. Currently we're breaking, notice the way this indicator is curving down. So this type of action could indicate that we're about to change the direction, because now notice how close the blue line is to price action. Blue line is mere 4% away from price action, but even until very recently, I don't know, let's just even say this area around the green line, around the red line, it was like 10% away. So now we're very close, and it's rather easy for price action to change into bullish. So we're currently looking at wheat to close above 582. I guess that's per bushel, and that's not out of the ordinary. It's very possible. So should that occur, wheat could again spike higher. How much higher? I don't know. Maybe towards like 680, maybe even 690. It's possible. So that's wheat. Another one he requested is coffee. Coffee, people seem to be enjoying. Everybody seems to like coffee. The original breakout occurred back on November 2023, where I'm hovering. And then it's the same thing as I showed for gold. You just need my indicators, but basically every time we pull back towards the blue line, we keep buying, and then that's the essence of this whole trend trading. So currently we probably would be long at this point. We would be buying at this point. Would this particular trade work? There's no way to tell. I mean, so far it has been working pretty well. Always the very last trade will fail, because that's when we'll see a change of trend. So right now I would say I would be thinking about buying coffee, if anything, but I don't trade coffee and I don't trade wheat, so that's up to you to decide if you trade those commodities. That's it for this week's recap. Please head over to MasterChartsTrading.com. Click on sign up for one of the products. Again, if you want my indicators, trading indicators, these are these lines on the chart. Once again, you can trade pretty much anything under the sun on most time frames, and I can explain everything. All you need to do is sign up for a free TradingView.com account. Notice right here where I'm hovering, TradingView.com. That is a free online platform. So once you sign up for that, come back to my site, sign up for trading indicators, and I will open the door for you on TradingView.com. This way you will see my indicators on your chart on TradingView.com. Newsletters, so I send out daily alerts and members only videos. This week we'll be covering a whole bunch of various ETFs, commodities, stocks, and also I will send out the video covering all of the stocks separately. And of course the best deal is to get both trading indicators and newsletters, and that is a best deal because you will get both of this. And at yearly subscription, it's equivalent of $49.95 per month. So that's 2 free months for free, or 17% off of a monthly subscription, which is $59.95 per month. All of my plans come with free 7-day trial, so you have 7 days to try it out. And if you don't like it, you can always cancel. However, very few people cancel because it is very useful. That's it for this week's recap. Please don't forget to hit the like button, subscribe to this channel, share this video, ask any questions you like, make a comment. Thank you for watching and have another great trading week. Bye-bye.